Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on in the news, most recently with BTC, taking a look at the on-chain data, any potential issues with exchanges, and of course that technical analysis as well is where I think Bitcoin is going on the small time frames and the larger ones as well. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into today's video, kicking things off with the latest news for Bitcoin. And we're going to start things off here. So Bloomberg ETF expert. BlackRock Bitcoin spot ETF approval set to unlock $30 trillion wealth surge for crypto market. Can it drive Bitcoin price to a new all-time high of $150,000? So obviously everyone loves a good old round number. Let's just say, we can see here 100,000, 150,000, 70,000, and it doesn't always go to those nice round numbers, right? So it's the first thing that we have to kind of acknowledge. Now, 150k sounds very, very good. Wouldn't mind that at all. Maybe we'll see if there's something in the data that kind of suggests somewhere where that could potentially go on the kind of next bull market. Now, obviously, BlackRock's ETF, Bitcoin ETF, spot ETF, will be very, very good for crypto as a whole, right? 30 trillion. Obviously, that's the total, I think, assets under management by BlackRock is estimated value of $30 trillion. Obviously, that's the value of the stocks and things like that. It's an actual money that's sat there. But nonetheless, it's going to be very, very interesting to see what happens. And we have to kind of think of this quite logically. Okay, if Bitcoin spot ETF opens up with BlackRock, is there going to be new money that comes in, or are we just going to move money from place A to place B, right? Robbing Peter to pay Paul and all these kind of things. And so we have to kind of understand, okay, how much money actually is going to flow into Bitcoin spot ETF and all those kind of things. And I think there's going to be a fair amount of it, but what would that mean for the opposite? Because, if it's going to be moving money from one asset class to another, then are we going to see a bear market on let's say, the stock market, whilst a bull market on the crypto market? Is there going to be a decoupling from, the S&P 500 and versus that of crypto and so forth, right? There's lots of things here to kind of consider and think about. At the moment, obviously, we see the liquidity being sucked out of the market, and that's because of the interest rate hikes and everything that the Fed are doing after, printing way too much money back in 2020. And so it's very interesting. So basically, the senior ETF analyst, Eric, basically projects that Bitcoin spot ETF could potentially unleash a monumental 30 trillion from the financial advisors into the crypto market, possibly. But again, it's one of those things you can't just create something out of nothing, and so it's going to be interesting to kind of see how this goes. And obviously, they're saying the influx could project or propel is probably the better word, Bitcoin's price to a new all-time high of 150k, right, and so forth. And I think a lot of this is all just great. You can say all these things, but where's the actual, evidence of this at the moment? And I think it's all great for certain people, and their jobs are to kind of try to push the prices of things in particular directions. And try to get a bit of a buzz going for the Bitcoin spot ETF. Now, obviously, everything's been delayed, which brings me on to the next piece of news, which is that Grayscale have asked the SEC to meet on way forward for Bitcoin ETF conversion. And so it's going to be an interesting one. We believe the trust's nearly 1 million investors deserve their fair playing field as quickly as possible, Grayscale's lawyers wrote to the regulator. I don't think the regulator is going to be overly open to doing much anytime soon. The whole thing is delay. And so, we'll see. Now that the Court of Appeals has spoken. There is no available rationale that would distinguish a Bitcoin futures ETP from a spot Bitcoin ETP under the legal analysis provided previously adopted by the Commission in rejecting spot Bitcoin ETPs. And so we've got some interesting things going on. Ultimately, we are going to see how the SEC do respond, if they will respond, whether they choose to ignore it like they do usually, or whether they are going to actually meet and work on a way forward. It's going to be interesting, but all these things are something that is going to take longer time to kind of play out. These are not quick wins by any stretch of the imagination, and that brings me on to the next piece of news, which essentially is that Bitcoin's price metric copies the move that last came before the 25 drop of FTX Crash. Now, a lot of people don't understand or don't want to acknowledge the idea that we can see a significant move to the downside when it comes to Bitcoin's price. There are a few of us out there, myself included, JB obviously you see on the channel as well, and a few other analysts out there that actually are seeing exactly what it is going on. And that is essentially that there's weakness in the move to the upside. And the only people who are backing it at the moment are retail investors. This is not a recipe for success. And so we obviously have other analysts here also looking at the market through different lenses and coming up to the same conclusion, right? We can see that there's many reasons why the market might be dropping down towards that $20,000 level. And so we need to be really, really cautious. We don't want to just kind of think that we could only ever go up without seeing these large, significant and healthy corrections to the downside, because a 25% move to the downside on Bitcoin's price isn't a shock to the system. It should never be a shock to the system. Back in 2017, it was quite common for a 40% move in Bitcoin. In 2021, we had it very easy where we saw 20% moves and we didn't really have any kind of major problems with that bull market. But yet here, I think we could be revisiting some of those historical problems where Bitcoin saw a lot of profits getting taken off the table and then pumped right the way back up again, really kind of trapping out a lot of retail investors. A lot of liquidity is being provided for the wealthier side of the argument, and unfortunately that liquidity is coming from retail investors at the moment, which will bring me over into the data side of today's video, right? Which, if I push the right button, data side. So data watch, as I labeled it up here. So membership.𝗕𝗘𝗪𝗏𝗀𝗧𝗏 is our website. For memberships. Inside the membership platform, we have so much to offer, right? We've got 7-day free trial across all the plans, where we have member-only video content, written project reviews, accumulation zones, areas that I think cryptocurrencies are going down to, where we could do dollar cost averaging and things like that, all the way through to, well, just so much more. You can check it out. Links are in the description below. The 7-day free trial is across all the plans, so you can test everything out before you buy it, essentially. Obviously, if you do not want to continue, you do have to go into your profile area and then go to the subscriptions and cancel. If you do not cancel the 7-day free trial, you will be charged for the plan that you subscribe to. So just bear that in mind. But we're here to take a look at the data zone. And in the data zone, we have obviously the accumulation zones, Bitcoin, Ethereum, Cardano, XRP. We're going to be taking a look at the Bitcoin data specifically, and we're going to jump on over into it. It'll look like this here. And so we have 4 tabs at the moment. I'm working on a refreshed version of this. It'll come out shortly, probably in the next few weeks or so, where we have a lot more data to come in here. So at the moment, we kind of have 4 tabs: overview, exchanges, liquidations, and wallets. You'll be familiar with wallets if you're new to the channel. If you've been around on the channel for a while. If you're new, some of this might be a little bit strange to you guys. We have the overview, obviously, with the yearly inflation rate being 1.85%, all the way through to the circulating supply, the all-time high, the days since the all-time high, the amount of accounts that there are, or addresses that there are, 49 million, and all that kind of stuff, right? We're going to take a look at the liquidations, because yesterday we saw BitMEX with unusually high liquidations for BTC. Now, they are not on the list now. This tells me that they have obviously liquidated everybody who was required to be liquidated yesterday for whatever reason. It was $7 million of liquidations just on $7.8 million just on BitMEX yesterday. It was very, very unusual activity. They are never normally at the top of the list, and they were yesterday. So we read into that. I'll say, personally, if I were on BitMEX with cryptocurrency, well, yes, they would have spooked me and I would not have stayed on that exchange. So again, it's up to you guys as to kind of how you do things. I personally would not be keeping my cryptocurrency on any exchange personally. I would be keeping it in cold storage, like using their Ledger device, for example. So today, in the last 24 hours, this was updated at 6:22 UTC, by the way, we can see that Binance was the exchange with the most amount of liquidations at 2.11 million. And that's not unusual. That's very much exactly as you'd kind of expect it to be. OKX is also at the top there at 1.9 million. Not unusual. After that, obviously, it drops right the way down to 𝗕𝗓𝗀𝗀𝗪 at 570,000, then Bybit at 380,000, and then CoinEx at 15,000. So for the most part, this is normal. This is what normally it would look like with the kind of balance between these exchanges. Yesterday was 𝗕𝗢𝗠𝗠𝗘𝗡𝗧𝗏 with 50% of liquidation sitting just with BitMEX. Today, we see Binance represents 42%, OKX represents 38%, 𝗕𝗓𝗪𝗀𝗀𝗪 11%, and Bybit 7%. Ultimately, short positions were liquidated as we did see a little bit move to the upside. 43.26% were long that got wiped out, and 56.74% were short positions that got wiped out. So at the moment, nothing unusual to report today. There definitely was unusual activity yesterday with BitMEX, but for today, it's actually pretty much business as usual. Nothing too much from there. We'll quickly just take a peek at the wallets here, just kind of reflect on the whales here. Again, there's 2,013 wallets, down 0.4% in the last 7 days, down 0.15% in 30 days, down 0.69% in the last 90 days, down 0.1% in the last 180 days, and down 6.2% in the last 365 days. The black line represents the number of wallets that have over 1,000 Bitcoin, and obviously the orange line represents the price of Bitcoin. This essentially shows us that in this move to the upside here, these wallets have been decreasing, not increasing. Okay, in fact, they've been decreasing pretty much during this entire bear market. They've been using the liquidity that comes from our retail investors. Take a look at the retail investors, which is the 1 Bitcoin or more. There's over 1 million wallets. You can see that they're up on all of the different metrics here from 365 days all the way down to 7 days. And you can see that they've just been buying. And who have they been buying it from? Well, they've been buying it from the whales. Okay, so it's important that we understand that you can't just magically buy Bitcoin out of thin air. Okay, there's always a buyer, there's always a seller. And if we're looking at massive selling pressure, then there is also going to be massive buying pressure at different layers and different levels. And so we have to make a decision internally. Everybody has to do this for themselves. It's not something I can tell you. I'm not a financial advisor. But to me, this would read like a very black and white story. The large institutional investors are not backing the price of Bitcoin, and they are looking for liquidity to exit their positions. That liquidity has been provided by retail investors. And so we have to ask ourselves a very simple question. If the whales are not buying, then who is going to be driving the price of Bitcoin to the new all-time high? Okay, forget ETFs for a moment. Unfortunately, if retail have already been providing all that liquidity, they're kind of exhausting themselves, and they don't necessarily have all the extra funding to kind of, soak up all that additional supply that could be bet there. And ultimately, it's not going to be retail investors that are driving that next bullish market or that move to the all-time high. Ultimately, I think that has to be institutional level investors, or at least we have to have institutional level involvement before we can actually see these bigger all-time high movements. And so for me, I think it's an obvious one. We're going to have to see the whales buy. We're going to have to see the large institutional investors buy Bitcoin. Okay, and until they're buying the Bitcoin, I do not expect us to kind of see a new all-time high. And so therefore, if they need to buy it, then someone needs to sell it to them. And that's going to have to be the retail investors, as are the ones that are currently holding a significant amount of the Bitcoin supply. So if we want to see the whales buy, we need to see the retail investors sell, which brings me to, there's 1 million wallets that have over 1 Bitcoin. If we just saw a 30% reduction and 300,000 Bitcoin go up for sale, then we might actually be in a pretty decent in place. 20-30% reduction wouldn't be too much of a miss here. A majority of retail investors would still hold, but there should be a bit of a shakeout for the weakest or most vulnerable retail investors to enable the larger investors, the larger institutional players to actually buy up Bitcoin. Now, it is possible that maybe there are some internal workings at that whale level, but realistically speaking, for 1,000 Bitcoin or more, there's 2,000 wallets that have more than 1,000 Bitcoin. We need to see 100,000 or 200,000 Bitcoin come into the ecosystem here to actually enable these whales to buy. And I think that can only really happen from the retail side. But let me know what your thoughts are on that in the comments down below. Let's go ahead and take a look at the technical analysis here for BTC. So on our hourly chart here, we are looking for a bit of a move to the upside. Okay, we are looking for this to kind of move up. This hasn't changed from yesterday. We're looking at 26,365 to 26,559. For this move. Now, we saw the breakdown. We can see this B wave here. We've got weakness in this move to the upside already. So it's not looking strong to kind of take this move up here. So we have to be a little bit cautious because if we start to break on down lower than 25,337, it does invalidate the idea of moving up into this yellow box area here. Okay, so anything lower than 25,337, then unfortunately, yeah, we're just continuing down. We are not going for the $26,000 range. Okay, so we'll have to keep a close eye on that. For the most part, this is where the current structure sits, but I do see weakness in our current moves, still below the 50 EMA. And really struggling here on equilibrium as well. So it's not looking strong, but we're still hopeful that this does move out towards 26,365 on our hourly chart. Taking it up into the daily time frame, we are of course still bearish. On the daily time frame, we are targeting down towards 22,693 to 23,874. Now, if we take that current price, we're talking about a reduction of 7 to 11%, okay, somewhere in that kind of range. Now, this is because we failed to break out of our 5-wave pattern. So our 5-wave structure here contains all the inner workings you would expect of an impulsive breakdown for Bitcoin's price action. And we're just potentially in the wave 2 right now out of the 5-wave pattern here. So as you can kind of see, we'd look for this to kind of come down in a 5-wave structure like so. Okay, and so we've kind of created the wave 1 at the moment. We're inside the wave 2 currently, at least I believe we are. And then we're going to move down into the wave 3 after that. Then bounce for a wave 4, then down into the final 5th wave movement. And then from once this is kind of done, once this is complete, we'll then see a bigger swing to the upside where we'll probably take out that fair value gap if we do not manage to do it beforehand. So essentially here on our daily time frame, we are bearish. Our structures are unfortunately yet to confirm this. I think there's a little bit of a lag, and usually is when it comes to indicators on TradingView. We can actually still see that we have a bullish structure on the daily time frame. However, I suspect that is likely to change when we actually break down lower than our wave 3 and get a closed position down here. So once that happens, I suspect that we'll then start to see a change of characterization of the structure of the market from a smart money concepts point of view. Elliott wave theory already tells us that we're in this bearish structure because we failed to go higher than 28,588. Okay, so we failed to break the structure. We continue this move to the downside. Break the structure, then we can obviously be complete down here, and we can talk about that correction upwards before maybe breaking down slightly differently. Ultimately, I think a breakdown is something that we have to experience here, at least on the smaller time frame like the hourly, 4-hourly, and daily. We'll keep a close eye on it though. Taking a look at the weekly standpoint, we're finding support at the moment on the 200 EMA. And so the 200 weekly EMA is acting as our support level. If we do get a weekly close below this, then we are going to find ourselves in a very difficult position. So our 200 weekly EMA from a USD point of view is 25,673. Okay, now if I go ahead and switch this over into a USDT pair, it's actually sat at 24,688. So eventually, essentially closing on the USDT pair or lower than that 200 EMA on the USDT USDT pair is potentially going to be in very, very bearish tail. Whereas the USD one, I think, very few people are looking at Bitcoin on the USD level, but it obviously does fluctuate from the stablecoin. Essentially, I prefer the stablecoin trading pairs rather than the USD trading pairs, but essentially they kind of should mirror each other. There are just slightly different numbers that are associated with them. Obviously, we use different exchanges as well, which obviously doesn't help with that. But for the most part, we find ourselves above the 200 EMA right now on the weekly time frame, and this is a positive thing because as long as the price action stays above this level, then essentially Bitcoin bulls have a little bit of support to kind of rely on. If we were to close below on the weekly level, that could be a pretty big indication of some bearishness for the longer term. So we need to be a little bit cautious when it comes to that as well. I think, guys, that's going to wrap up today's video. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one, though, guys, have a fantastic day.